So today I took about 4 trades. I took 2 break-even, 1 loss and 1 win, and I ended the new eval at $25,337. And the crazy part is, if I would have executed a little bit cleaner and a little bit better, I would have passed the challenge today. So here's what happened. So in the morning, I took 2 break-even trades on gold, which shouldn't have been a break-even trade, and I took 1 loss on NQ, and I ended up getting a 1 win on NQ in the afternoon. And I'll break down all 3 of them, all 4 of them, sorry. Yep, that's what happened. So let me see. And one of the right thing that I did today, that in the past I would always let my trade go to stop loss. So recently I've been more protective of the trades. So as soon as it moves over 50% or above, I move my stop loss to break even. And when you do that, at first it really frustrates you a lot, because it can possibly come to the entry and then go to your take profit. And one of the trade did that. So you have to mentally prepare yourself and being okay with break even, coming to your break entry and then hit your take profit. Because if the flow of the price is good, it shouldn't go all the way to 50-80% of your trade and then reverses. And when it does, most often than not, it will go to your stop loss. So I've been implementing a lot of break even, and I'm okay with it, and I'm happy with it. Whatever happens, happens. So without further ado, let's get right into it. So I'm gonna go over the trades that I took on the gold. So the trade that I took on the gold, let me just, where is this? Start new. So these were the trade I took today. If my trading view works. All right. So we came here. I think it was like 8 or 9 a.m. somewhere around that time. So go to 1 minute. Let me see if I can remember. Did I take this trade? It's 8:59. I think I did. Yes, this was the trade. I think this was one of the break-even trades. Yes, this was one of the break-even trades. And when the price broke through here, I got in to this trade. I guess I can just show you with a quick back testing. So I had 2 contracts. I got in here, and my take profit was here. Yeah, as soon as it gets to this area, I should have probably take off one of them in here. I didn't. So I moved my stop loss right here. I was like, I don't want to see this coming back. And guess what? It came back and it took me out. That's why I said it shouldn't have been a break even, because I had a clear target here. At least one of my contracts should have been taken off here. This was a little bit too greedy, a little bit too ambitious. And as soon as I hit the break even, I just remembered, I was like, oh shoot, this is FOMC day. So the morning price action is going to be extremely choppy. But there was opportunities if you wanted to make money. And we just came to this 4-hour indication level and cleanly start reversing it. And I went over my previous videos as well. So you don't, as long as one of the candles doesn't close above the previous week. So we had 2 confluence to take this trade. First of all, we came to this 4-hour indication. And the second thing, this 8 a.m. candle did not close above the previous wick. So that's my sign for shorting. I was like, we're gonna go to all the way here. I was a little bit too ambitious, a little bit greedy maybe when it comes to that. And then I was like, no problem, market is giving me another opportunity. I'm sure I'm gonna have another opportunity. And I believe this was the one I took. Yeah, I think this was the one I took. So I took here because we closed below it. My entry was actually here. Stop loss was here, and my take profit again, it was here. I was like, this time around, we're definitely gonna go hit the hit that, because I was like, this should be the time. And let me see, what did I do in this one? Oh, I remember what I did on this one. So since my entry was here, this time around I did have a contract taken off on this one. So I was like, you know what? If the price comes here, I'll take one of my contract off, let the rest run. And as soon as I saw it reversing, I put my stop loss right here. I think this was my entry. And guess what? The price came in and took me out. Boom. Because my entry was here. If I would have just left my stop loss right there, I would have been fine. Because I was like, no way, we came all the way down here. We got so close and it's reversing. I'm moving to break even. I was like, this is the FOMC morning. The price is probably going to be choppy, so I'm okay with two break evens. And I moved on to the NQ, because one of my alarm went off on NQ. And guess what? As soon as we get the break even, the price goes ahead and hit the target. Not only hit that target, I believe we end up hitting this one. I think sometime in about like an hour or two after that. Anyway, the moral of the story is, and the reason why I did it is because once I realized it's a FOMC day, because FOMC mornings are extremely choppy. So first of all, you don't want to trade FOMC days, and even if you do, you want to be extremely cautious. You want to de-risk. You want to trail your stop loss aggressively. Maybe I did it a little bit too aggressively. Actually not. Both times it went like 80% to my target, and then reversed and it took me out of break even. Because so many times I had trades that go to 80%, 90%, 95%, and then reverses and then come and take my stop loss and then go to the profit. I was like, which one is more painful? Losing money or seeing it at break even and then hit the target? I was like, you know what? I choose the lesser evil, the less painful version of it. And that is why and then I was done with gold on that one. So I actually ended up not hitting it. So it went very close again and then started reversing again. So yeah, choppy, a little bit choppy price action. So the strategy was good. My execution wasn't. So two break-even trades on the gold, and let's go to NQ so I can show you my my trades in that one. Oh yeah, this was the one that I lost, which I shouldn't have. And this is the one that actually when I hit the target. So this was the one. I walk around here. I was like, okay, good. And the 9 a.m. candle closes below it. I was like, perfect. So I draw my line here. Oh, by the way, I changed the candles color. Hopefully, there were like a couple of people complained about the candle color and not being able to see it cleanly and correctly. So I hope you like the colors. So you go down to 1 minute. Oh, let me just go back a little bit real quick so I can show you the trade that I took. Let me go start new. There it is. So yeah, clean, perfect trade. This is like a perfect trade. I'm a little bit pissed that I lost money on this one, because if I would have gained this trade and my next trade on the FOMC day, I would have passed the challenge, and I'll tell you why. So here, so higher on the higher time perspective, we are bearish. So we have this 4-hour indication. We came rejected. We came to rejected. We went to rejected. So I was like, this is a very easy low-hanging trade. I was like, I don't care if it's FOMC. We should just come hit this target. So I thought. So we came here. Let me see. I think when I mark my stuff, I think I saw the trade somewhere around here, because I remember this one too. I think I saw this trade right around here. So I got in this one with about 3 or 5 contracts. So I put my stop loss right here, and I put my take profit right here. 274 ticks with about 5 contract. Yeah. So I would have made some decent money. So 274 times 2.5, so I would have made 685. So we came, and then so we came this close. I was like, you know what? I'm just gonna move my stop loss somewhere around here, because I was like, we may come back to this line and then retest it and then continue. I was like, come on, man, come on, don't take me out, don't take me out, don't take me out. And I think it was somewhere around here I lost it. And I saw this one, I was like, you know what? I'm gonna move it right here, because we shouldn't hit that high. It's like, no way we're gonna go hit that high. And we did hit that high. So, and it was around 10:21. It was outside the time frame that I wanted to trade. I was like, you know what? Same thing happened on the gold. We didn't hit it. So I was like, you know what? I'm gonna go to gym, buy some grocery store, go to a grocery store, buy some stuff, and come back. Yeah, so that's what I did. And I believe the price ended up hitting that target. Yep. Yep, right here. So we end up hitting it at 10:40. We hit it literally like 20 minutes after I got out of the trade. Yeah. So that's what happened in that one. Hopefully you learned something from it. So I give you one, boom, 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 came back, boom, boom. Yeah, I trailed it a little bit too aggressive. So now let's go back to hourly. And then let's go to the FOMC. Okay, let me show you the FOMC and see what happened. What happened on FOMC. I don't think I made a mistake, but for whatever reason, my Forex factory was reset back to the New York time. I have my reset factory set on Central time because I live in Texas. So in my mind, I was like, well, the FOMC is at 2 p.m. Almost about to get home. I did my shopping, my gym and everything. I was on my way to home. And I got this X notification about FOMC, about the rate cut. So I was like, what? It's 1 p.m. I thought it was at 2 p.m. Then it just hit me right there. I was like, no, the Forex factory probably reset my time again. And somehow mentally I knew it was at 1 p.m. Central time, but because the Forex Factory, because I check Forex Factory every morning, because Forex Factory showed them at 2 p.m. I was like, I still have an hour to get ready for the FOMC trade. Although I don't trade FOMC unless something extremely good presents itself, and it did. But when it did, I was already driving, so I didn't want to like get on my phone and trade. So I'm gonna show you where I got to see the trade. Sorry. So I believe it was like somewhere around here. So yeah, I saw that when I got home, I saw the trade somewhere around here. I was like, no, I missed the move. I could have gone in here, I missed the move. And there was another opportunity present itself around 242. So let's go to 242, yeah. So 242, as soon as I saw this, rejection from fair value, yeah. And I see this doji candle, and I had my target here. I had my 4-hour high target here. I was like, if we hit this trade from here to here, it's 847 ticks. We were gonna pass the challenge. And I knew in my gut that we were gonna hit that 4-hour high, because I have traded these FOMC and backtested them enough time to know where they like to go. They like to hit the data high, they like to hit the data low, and they like to hit the 4-hour or the daily high. Guess what happened? When I got home, I had to turn on the computer, and I'm trying to log into my to my account, to my prop firm account. But for whatever reason, it's not letting me. It keeps loading, it keeps crashing, it keeps loading, it keeps crashing. And guess what? I missed the trade. Of course, it went up, and up. And by the time I was logged in, the price was right here. I could have still got in here. And I would have made about 349. But I don't want to chase the trades. That's like one of the biggest rules I never break. Do not chase the trades. Do not chase the trades. I always tell myself, do not chase trades. And when I see like setups like this is what I tell myself. Be courageous, focus on the process. Everything you want is on the other side of fear. Because you're going to always have this feeling, because I still have it, and I'm probably going to have it forever. Because you still have that little bit of uncertainty, a little bit of fear of like, oh, what if it doesn't work out? What if it doesn't work out? And another rule I have for myself is that I don't chase trades. If I miss the entry, so be it. I'm not gonna chase, because the price can you can easily get in here, and the price can do this, take you out of your stop loss, and then go hit your target. So I didn't get in. So I was like, you know what? I'm gonna be patient. The market probably going to take the 4-hour high and give me one last opportunity for the day. And it did right here. So it took that high. And then I believe I got into this trade somewhere around here. Yeah. So yeah, somewhere around here. I saw that we got like a nice, this is not the strategy, by the way. The only trade that actually worked and I took the trade is the trade that I didn't follow the quote unquote the strategy. So I was like, we took the 4-hour high. We are having like this bowl looking recovery down to these areas. I was like, why don't I just trade that? So I saw it around here because we kept breaking these structures here. So like, I'm just gonna get in somewhere around here. So that's what I did. I got in somewhere around here. And my take profit was somewhere around here, I believe. It was like I think it was like somewhere around here. Yeah. It was like, I remember it was around 300 ticks. So yeah, it hit it. We made the money. So we ended up being at $25,337. So we had 2 break even, we lost 200, then we gained another 500-600, and then we got to 25,33.7. So that's what happened today. And the biggest thing I want to mention today is that I saw a lot of comments, like people telling me about different details and different idea and why it's not working, why it's working. There are a lot of people that like it and they love it. And they say it works, and obviously it works. I came across this other YouTuber the other day, and I was watching his content. He got like a 20K payout from a Top Step, and he had a strategy video. And I kid you not, like I watched his video, and he gave me a good reminder of like trade what you see. I get it. We all have a strategy. We all have a process that you want to follow, but sometimes you just have to trade what you see. It's as simple as that. You see the price going up, you buy. You see the price going down, you sell. And when I was around this area, that video popped in my head. That thought popped in my head, because that's how I used to trade, and I was actually doing decently because I wasn't overthinking it at the beginning. About 5 months ago, when I just got into trading, I was seeing the price going down, I would sell. I was seeing the price going up, I would buy. As I got into more strategy and more confluences, I start complicating it. Yeah, it's good to have a strategy. You want to have a certain key area, point of interest to get in and get out. But overall, just pay attention to the price. That's what I tell myself every day. I'm like, for the love of God, pay attention to the price. Don't try to catch the falling knife just because your strategy or process tell you to do so. And just see what the price is. Like when you're around here, you clearly can see, like you can clearly see that we took the liquidity and we were like running out of juice. And as soon as I saw we broke a structure, I was like, you know what? That's it. I'm gonna get in. I kept it extremely simple. So I got in. I almost got stopped out, I think, on this one because I was trailing my stop loss again. I went a little bit heavy. And I think this one ended up working out. Yeah, 1608, yeah. We got out somewhere around here. Because the cutoff time for your margin going up is at 410. So yeah, we just got out of the trade right before the margin up. Because if you have an open trade and the 410 hits, if you don't have enough margin in your account, all your orders is just gonna get closed anyway. So I just closed the trade over there. But yeah, going back to it is just trade what you see. Don't overcomplicate it. That's what I tell myself, and I'm documenting this journey. Hopefully you learn something from it, but it's just mostly for me documenting everything. I'm not really guru. My goal is not to become one. I'm not really here to teach anybody anything. I'm just documenting my journey. Hopefully you get to learn something from it, enjoy it, and follow through. That's literally my goal, and from the past 3 videos, it looks like people do. So if you made it this far and you're still around here, just follow me on X and Instagram. Both of them are Ali Trade CCT. I'll leave it in my description. Yeah, just follow me on Instagram, X, and on Instagram you can just send me your trades. I would love to help you. Send me your trades. Take a screenshot of your trades. If you need any help, just let me know. I have a public page, so I get to see DMs. You get to DM me very easily, or on X, doesn't really matter, whichever works out. And yeah, no fluff, no guru BS, just a real journey. And the credit again goes to Trades by Side and Cramson Capital. Trades by Side for ICC, indication correction continuation, and Cramson Capital with CCT, candle continuation theory. And it's a very mechanical way of trading, and I love it. It took me from a losing trader past 5 months to a break-even stage to now slowly start to gain momentum and winning trades. And I was very excited to share my journey, and I continue to do so as long as you guys ask for it. And that's it. So see you guys in the next one. Love and peace to everybody who subscribe, like, and comment. And see you in the next one.